Hello and welcome to another Monday report by Bordier. The week was, of course, dominated by the strikes between Israel and Iran, and the weekend saw an escalation in this conflict. This logically pushed oil sharply higher, even if global supply is not really at risk today, due to the large reserve of production capacity of Saudi Arabia and OPEC in general. The other beneficiary is gold at an all-time high and up 30% since early 2025. Developed country equities retreated overall while the dollar continued on its downward trajectory, minus 1% last week. On the economic front, the most important news were the employment figures and above all the inflation figures for the US. And here you can see that for the time being, consumer inflation at 0.1% over 1 month and 2.4% over 1 year is continuing its downward trajectory. For the time being, because the tariffs that came into force in April are currently being negotiated will, in our view, have a bullish effect on US inflation, which also remains sensitive to oil prices. In the meantime, this enabled rates to ease and sovereign and corporate bonds to post a positive performance. This week, we will of course be following developments in the Middle East, but also US retail sales and real estate figures, household confidence in Europe and Chinese indicators. China, where May's retail sales published this morning, came as a positive surprise. In our portfolios, we have reintegrated Eaton's share. Eaton is the US specialist in electrical equipment, which ticks all the boxes: US reindustrialization, electrification, and digitalization with good exposure to investments in data centers. The stock was removed from our portfolios in August 2024 after being held for over 4 years due to fears on a slowdown in growth linked to data centers. But these fears have now been allayed, and peak growth is not expected before at least 2026. That's all for today. Thank you all for listening, and see you next week.